Hey guys, what to trade next week? In this video, we'll analyze pound dollar and pound yen. We'll take a look at euro Swiss pair and dollar index. We'll analyze gold, and I will share with you my trading plan for dollar Swiss pair. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. I want to start our analysis from pound yen pair. We are in a daily time frame, and you can see that the pair is unstoppable. You can see that for a quite long period of time the market is growing. And the last week was very bullish, and last week the market kept forming the high momentum bullish candles. And the question is where the market will stop. The question is where is the closest strong resistance from where we will see the next correctional movement. And the problem is that if we analyze the daily time frame, we cannot spot any historical key level. Here on the left, we can see that it feels like we are trading in the no man's land. And that is the perfect example why occasionally the weekly time frame can help. Because if we open a weekly time frame and analyze the historical key levels, we can spot these structures that the market was respecting in 2015. And here, that structures will help us to identify the next potential resistances. Cheaters, don't miss a big summer sale on my premium group. Until Sunday you can get a lifetime access to the group with a 40% discount. You will get the access to my daily live streams with live trading and live Q&As. You will get my ebook and video course. And as a bonus, you will get a lifetime access to my VIP signals group. For more info, check the link in the description below. It is vasilychatry.com/private group. Or text me in one of the social networks. I will give you more details. Don't miss your chance, traders. Analyzing the key levels here on the left, we can spot that our closest horizontal resistance is over here, around 187 level. It is the closest structure, and it simply means, traders, that the pair may keep growing in such a pace for a long period of time till that resistance is reached, because that will be the first strong resistance from where we will look for a pullback. And of course, the market can violate that resistance to the upside as well, and the pair may can go even higher. And the main structure on focus will be definitely that resistance. It feels like it is the 10 years high, and that structure will be very important for the market participants. So these are the resistances for you to watch, and I know that many of you want to short the pair, but realize that shorting the pair, you will go against the trend. And always remember that the trend is always your friend, and it is always better to be with the trend. And the closest support from where I would suggest you looking for buying is based on that trend line. That trend line so far is the closest strong structure from where it will be safe for you to buy. So buy the pair only after a pullback, and that trend line will give you the safe point to buy from. Euro Swiss pair daily time frame, and here, traders, I spotted the perfect example of a bullish reversal. And in order to spot that, we should analyze the price action first, because we can see that the pair is trading in a bearish trend. You can see that since January, the market keeps hitting the lower lows and lower highs. And you can see that something really changed when the market reached that support right here, because once that support was reached, the market stopped setting new level lows, and instead we started to set the equal lows, and the market started to consolidate. The market started to trade within that horizontal range, perfectly respecting its boundaries, and within that range the trading volumes were accumulating. And take a look what happened then. Then after the accumulation, we got the explosive breakout. You can see that the price formed a high momentum bullish candle, and we violated the resistance of the range. And moreover, if we analyze the price action, here now we have the strong bullish impulse, the retracement with the high LEO, and the bullish impulse with a new high close. So it is already a minor bullish trend right here, and definitely it is the perfect indication of the confirmed bullish reversal. So here on Euro Swiss, bullish continuation will be expected. I strongly believe that the pair will keep growing. And so far, the goal for the buyers will most likely be that structure right here. So I expect growth and look for buying around the broken resistance of the range. That will be the safe point for you to buy, and your safest stop loss will definitely be below that wick over here. Have you seen pound dollar pair this week? Man, that was crazy. And this week, pound dollar pair violated a very important horizontal resistance to the upside. You can see that we formed a strong bullish candle and we closed above that structure. If we open a weekly time frame, traders, I want you to realize that here it wasn't just the daily structure, it was a key weekly structure. It was a very solid weekly structure resistance that was broken. So that breakout here is very important, and it will most likely lead to further bullish continuation. So far, the closest strong resistance that we can spot here on a weekly time frame is that horizontal resistance based on the price action of last year. So the pair will most likely keep growing, and for those who are looking for buying, for those who still is not holding the long position, I would suggest monitoring a very peculiar zone of demand. The zone of demand that is based on that weekly rising trend line and that broken horizontal structure, because the trend line and the horizontal structure now compose the contracting demand zone, the zone from where you should look for buying, expecting the next bullish wave to that resistance. Now let's analyze dollar index. We are on a daily time frame, and you can see that this week was very bearish for the index, and bears were pushing the market heavily this week. Even though this week was very bearish, the fact is that the market closed respecting that horizontal zone of demand. First, it was a very strong resistance, and after the breakout, it turned into support from where the impulsive movement initiated, impulsive bullish movement. And when the market dropped this week, the market perfectly respected the lower boundary of that structure. Now, if we open a 4-hour time frame and analyze the price action here in the 4-hour, we can spot that after a sharp bearish movement, the market stopped falling and we started to consolidate here in the 4-hour, and you can see that we have been rejected 2 times just recently. And then opening an hourly time frame. On an hourly time frame, we can see that the market was trading within a horizontal range. You can see that after the sell-off, the market started to trade in sideways, and the price formed the horizontal range. And what is important to notice is that on Friday, the price violated the resistance of the range to the upside. You can see that we formed the strong bullish candle that closed above the resistance of the range. To me, that breakout right here is very important, and it is the perfect indication of the local strengths of the buyers. So I would expect the correctional movement on dollar index next week. I believe that the index may keep growing, and so far I assume that the goal for the buyers will be that resistance. It is the closest historical structure, so chances will be high that the index will manage to reach that resistance. Time for update for dollar Swiss pair. And as I predicted, dollar Swiss dropped sharply. As you remember, traders, we spotted earlier the bearish flag pattern here on a daily time frame, and we also spotted a very important horizontal supply area here on a daily. And after the test of that resistance, the market violated the support of the flag, closed below that, retested, and then we saw a strong bearish movement. And you can see that on Thursday, the price has violated very important horizontal support to the downside. We closed below that, and on Friday we retested that structure. And because the market is bearish, from that broken structure we can look for shorting. And I would suggest looking for a confirmation to sell from that broken structure. If we open the 4-hour time frame, here in the 4-hour time frame, take a look at that candle right here. It is the doji candle, very peculiar doji candle that formed on a broken structure. Opening an hourly time frame, here we can spot cute double top pattern, a perfect reversal pattern. And in order to trade this pattern, next week we'll monitor the neckline of the pattern. Why? Because in order to confirm a bearish reversal, we will need the breakout of the neckline. Hourly candle close below that will confirm the strength of the sellers. And once the hourly candle closes below the neckline, there will be two options. The first option will be to sell the market aggressively once the candle closes below. And the second option will be to be conservative and sell on a retest. And personally, I will sell on a retest, shorting from here. Stop loss will strictly lie above the highs of the pattern, and your take profit will be the closest strong support. Your closest strong support is right here based on the local low. So that will be your trading opportunity for Monday. Also, traders, remember that the market may easily respect the neckline and bounce from that. If the price sets a new high close here in an hourly time frame, this setup will become invalid. The last but not least is gold. We are on a daily time frame, and traders, I guess you would agree with me that on a daily time frame nothing really changed, because here on a daily we have spotted earlier the horizontal range, and even though sellers were trying to violate the support of the range this week, you can see that the breakout right here was false and the price returned back within the boundaries of the range. So what is the plan now? For now, the best option for us is to monitor the price action within the boundaries of the range. And first of all, the first safest point for you to look for shorting will be, of course, the resistance of the range. If the price reaches the resistance of the range, from there I would suggest looking for shorting. However, there's one more option. The option that is based on the intraday analysis, because opening a 4-hour time frame, on a 4-hour, I have spotted that the market keeps setting the lower highs. Right here, you can see that we have the lower highs, and based on this lower highs, we can even draw a trend line, and that trend line we can trade, because analyzing the price action of the last 2 days, we can spot that over here we are kind of forming the head and shoulders pattern. Yeah, we already formed the left shoulder, the head, and currently we are forming the right shoulder. Here is the neckline of the pattern. And in order to sell gold with confirmation next week, pay close attention to the neckline of the pattern. If the 4-hour candle closes below the neckline, it will be a very bearish signal. And I would suggest shorting the market on a retest, setting your stop loss above the head and above the trend line, and your take profit will be our support of the range. It can be a very nice trade, traders. Just let the market complete the pattern and let the market close below the neckline. That will be a very strong bearish trigger. Alternatively, bullish breakout of that trend line to the upside will push the market higher. And then the goal for the buyers will be the resistance of the range from where we will look for shorting. Next week we have a lot of fundamentals in economic calendar, so be very careful because the market can be very active. Traders, if you have any questions, please feel free to ask me in the comment section. I always reply. Also, traders, don't forget about big summer sale, 40% off on premium group. The link in the description below. Traders, also please like this video, subscribe to my YouTube channel, and I will see you soon. Thank you so much for watching.